Welcome back. You're watching Young Turks and we're in conversation with the founder of global food tech delivery company, Deliveroo. In a challenging environment where the macros are looking increasingly challenging and as far as companies like yours are concerned, costs have to be kept an eye on. Margins are already fairly thin. How do you make the delivery aspect, the delivery side of this model actually work? And what do you anticipate as being the big changes that will need to happen in this gig space?
Well, I think the numbers speak for themselves, right? If you look at the UK, let's just take the UK, where since the end of lockdown, I would say, employment has been the tightest it's ever been. So the employment market's been the tightest it's ever been. Our retention rates are at an all-time high. Our application rates are at an all-time high. In fact, we've capped the number of people we put on the platform because we want to preserve earnings, right? And so if you just look at it from that standpoint, in the tightest labor market, our riders could go get an employed job at a supermarket, in a warehouse, at a restaurant. They could do all those things. They choose not to. They choose to work with us. Why? Well, one, obviously, it's earnings. That's fine. But secondly, this job, where I don't know exactly how it works in India, by the way, but certainly in our markets, you log in and out whenever you want. You accept an order, you reject an order. You can work with Amazon, you can work with someone else, and you are completely free to set up your day the way you wish. And that has immense appeal, and we're very proud of delivering that flexibility. And at the same time, we recognize that benefits are necessary and security is necessary, which is why we've entered into, for instance, a voluntary partnership with the GMB. This is the third largest labor union in the UK. To allow our riders a voice with unions at the table for any issues that come up as well, right? And so we always think about these things as we've developed something that we're very proud of, but it can always get better. We were the first online platform to offer free insurance to our riders in the event of a variety of different things, right? And so this is something where it's a competitive market for riders, just like it is for consumers, just like it is for merchants. And how are we going to drive a proposition that works for them?
Mm-hmm. Speaking of the environment and speaking of the similarities between what we've seen you experience and what we've seen food tech companies here in India experience, even when it comes to the IPO, Will, I mean, I'm sure that is something that you would like to forget. And I'm sure that post-IPO, the period that we've seen here in India for many of these companies is a period that they would like to forget and move on. But what has been the big lesson? What's been the big learning from that debacle of the IPO, and then how life changed for you from then on?
I don't know if I go that dramatic, actually. The way I think about it is the IPO is a financing event. It allowed us to raise a significant amount of capital, which has put us in a great position for today. And it was over 2 years ago, right? And I think a company is not going to be measured on what its first day IPO price performance is. I think a company is measured on a lot of other factors in addition to that. And so, I think our focus has been, as I said, building a great consumer value proposition, driving towards profitability, driving more growth into the business. And that's what we're focused on. I'm not sure exactly what the question is around the IPO, other than to me, it's a financing event. It was 2 years ago. And yes, it was a tough day, no question about it. But it was a long time ago, and I'm not the world's. It's not like something I sit around thinking about every single day.
No, the reason I asked you that question is because what we are seeing here in India is that there has been a sort of erosion of confidence with respect to new tech companies post them IPOing and post the very sort of lukewarm reaction post-IPO in the market. So I was trying to understand from you how you've gone about pitching the narrative to investors and what the learning therein has been for you as a company post the IPO. I understand it's a financing event, but it's also much more than that because it is a measure of confidence as well of the public markets.
Yeah, I think it is, but I think, kind of how a company does on its IPO date is literally one day in what hopefully is a very long corporate history. And ultimately, if you feel if it was a decent financing event, then that's also a good thing. I think there's no question at all that tech valuations have suffered greatly, and that's not an Indian phenomenon. That's not a British phenomenon. That's in America. That's in Asia. That's in every single place. And really, what this is this interest rates have gone up. Investors have looked for safer assets, right? We've seen this. I'm 43 years old. I've seen it happen in 2000. I've seen it happen in 2008. And well, 2000 was a bit different, but same sort of kind of situation where there was a lack of confidence in certain things. And I think this is no different. And our job as founders and CEOs is not to obsess about the market day to day, but to focus on our business, to drive to more profitability, to make sure we're driving growth verticals, and to explain that to investors. And I think for the investors who have a longer term point of view, hopefully they view it as a good buying opportunity.
Yeah, and I think you're right that you cannot obsess about what the markets are doing as far as the stock is concerned. You need to obsess about building a sustainable business. And Will, I want to talk to you about that. As a founder, I know you've done a little bit of everything, including deliveries. Do you still do that sometime today?
Yeah, I do it about once a month in my neighborhood. I live in a neighborhood called Notting Hill in London. So that's where I do it. And then when I visit markets, I do it. So I was in Hong Kong a couple of months ago. I did a few deliveries near our office. I did some in Dubai. I was just there a couple of weeks ago as well. And so it's an opportunity to do primary research, right? I'm a writer. I'm interacting with the consumer. I'm interacting with the merchant. I'm interacting with our app. What could we do better? How could the experience be better for a rider, right? And that is something that I did every single day for a year in the first year. Now, that was out of necessity as opposed to sort of focusing on trying to just build a better product. But it formed a lot of the basis of my obsession with primary research that first year, for sure.
Yes, I would imagine that research does go back as part of the feedback loop to try and improve your service offering to customers. But, Will, what do you expect or estimate the changes that we are likely to see? What are the mega trends that you believe are likely to see in the food delivery business? Of course, cloud kitchens have been the norm now for the last few years, including here in India. People are talking about much more niche services. What do you see as being the big trends that we could perhaps see grow out over the next few years?
I think there are a number of sort of big trends. I think one is just hugely sort of secular tailwind in this industry. It's still young, I think, even in some of the most developed areas. So a market like the UAE for us, where users on average order over, I think it was like 7 or 8 times a month. That feels like one end of maturity, but then if you compare that to a South Korea, it's still not as mature, right? I think likewise we're going to see more non-food items delivered as well. So for example, we talked about our partnership with Boots, which is the UK's largest pharmacy company. We're gonna see various other types of non-food items on. So things like health and beauty have become a bigger and bigger category. I think sort of merchandising that in a way that is congruent with our brand, which has been historically very focused on food, is a really interesting challenge, right? And making sure we alert customers who are used to using our app in a certain way about all the new opportunities on there. I think that'll be pretty interesting. I also think what's going to be, also a really, it's happening now, but I do think it's going to become more and more important is packaging. We, as an industry, I think create a lot of incremental waste. That is just true because there's a lot of packaging involved in food delivery and grocery delivery and not, it's not just food, it's all delivery, right? And I think we have a real responsibility to work out what is the packaging that is most environmentally sound, and frankly, how do we even if that's the case, how do we reduce the amounts of packaging actually being used, right? So, can we trial things like bringing it back using reusable packaging, bringing it back to the restaurant? Can we trial with cheaper biodegradable products? One of the big, I think, hurdles for restaurants is the environmentally friendlier stuff is just more expensive, right? And so how do we kind of drive down that cost and toward adoption? And then I think on the environmental side for our vehicles, we are 90% two wheels. So it is mostly bicycles followed by scooters, but we've seen a huge increase in electric bikes and electric scooters. And I think that's going to be a really good thing as well.
Yeah, I think those are trends that we're seeing here in India as well. But Will, just to understand from you, given the opportunity that you see in the non-food side, would you consider a separate brand as far as the non-food side business is concerned, perhaps in the future? And what do you believe is going to be the revenue mix over the next 5 years between food and non-food for you?
Yeah, it's a good question. I don't know the answer to the second question. I don't know how big it's going to be. I do have pretty strong conviction, though, that grocery is going to be a lot bigger than where it is today. And grocery, about 20% of what we sell in grocery, you can count as non-food as well, even though it's under a grocer brand. Cleaning supplies, towels, things like that. Now, I do think we have this. Your first question was pretty funny to me because our brand is called Deliveroo, right? And in many respects, hopefully that means that we're bringing your local neighborhood to you in some ways. And if we were called Foodaroo, it would be a little more difficult. But Deliveroo, I think, works as a brand for just local logistics and delivery.
Yeah, absolutely. You have that advantage there. But as you pointed out yourself, that it has been identified as a food delivery service and a food delivery brand. But Will, it's been an absolute pleasure. Many thanks for stopping by and speaking with us here on Young Turks. We wish you and Deliveroo the very best of luck with your development center and your plans here in India, as well as your global plans. Thanks so much for speaking with us today.
Thank you, and sorry for the technical difficulties earlier. Hopefully that will be sorted out. Thank you.
No worries at all, Will. Thanks very much indeed. We will take a break here on Young Turks. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.